today, revealing that Mr. Icahn has bought 2 million shares in the company from Corvex with an option to buy another 2 million shares. Corvex has had a position in Energen and struck a deal with the company in March for a couple of board seats. Together, Icahn and Meister now have a 9.9% stake in that company. Carl Icahn joining us live right now by phone. Carl, welcome back.
Yeah, good to talk to you.
You as well. You as well. How did this whole thing come about? Where you and Keith Meister, as we say, are back together again?
Yeah, we're back. Keith called me on Friday. Came over Friday afternoon toward the evening, and we talked about Energen. And interestingly, lately, more than usual, a lot of shareholders of different companies have been calling me, where they feel they're being, shall we say, abused by the management, or not too strong of a word. I guess you'd say taking advantage of it some way. And, Keith, I respect quite a bit, and we talked about this company, and I looked into it more. What one of my analysts has been looking at it a bit anyway, and we look at risk-reward quite a bit, and in this case, it stands out very clearly that the company, at least in my opinion, Keith's obviously, is very undervalued. And so we bought some stock in it, and now we're a group with Keith.
So you say in the D that you filed that you look at the company as being undervalued, but that you reserve the right, or with others you could be interested in purchasing the company. Let me just be clear: are your first intentions with Meister to have the company, which has already said it's undergoing the strategic review, to put itself up for sale, and for one of the majors to come in and buy it? Is that the first choice?
Well, let me put it another way. If I could buy this company, I believe, just looking at it, and I'm not the expert in it, I personally think it's undervalued. And IEP has the capital. We've done quite well lately, and have a lot of cash around. We could buy this company.
Are you a stock or an options trader that is absolutely fed up with ordinary results? Are you ready for your breakthrough? I know how you feel, because everywhere I turned throughout my trading journey, everywhere I looked how to produce phenomenal results within a short amount of time, everybody was telling me, no, it's not possible. It's not real. It cannot be done. So I got fed up. I discovered the 5 core fundamentals that helped me turn $12,000 into $466,814 in less than 7 hours trading options from my laptop. I know this probably sounds unrealistic to some of you, but the truth is I did it. I will share with you in this interactive video course specifically everything, every single detail, every action, every stock that was traded. As a matter of fact, I'm sending you my brokerage stake, listing every trade that was taken that day. I realized one thing when I accomplished this, is that I wish I had someone years ago when I was starting my trading journey and throughout my trading career that has shared these 5 core fundamental principles with me, because that would have saved me a lot of headache. That would literally save me a lot of heartaches, a lot of lost and suffered relationships. That would have saved me a lot of losses. That would have saved me a lot of time from discovering all these answers on my own. This is what you will be able to learn from this interactive video course. Secret number 1, discover the best stocks for trading options. Secret number 2, discover the top 3 best chart patterns for huge returns. Do you struggle with the decision, should I sell now or should I wait? And sometimes when you make a decision, do you see your profits vanish, or do you drown in the grad when you get out of the position just because you see how much money you left on the table? Don't let this ever happen to you again. Secret number 3, discover the key to locking the gains. Secret number 4, knowing the trend will make you money. Discovering the TRO versus the trend will make you a fortune. Secret number 5, the holy grail of all secrets in trading: timing. Can you only imagine if you knew specifically on which days to trade and on which days to go fishing and enjoy life? And the secret number 6, the truth behind of how to trade the news that will take all the guesswork out of the equation and will help you trade with great confidence and extremely high probability. Today is your day. Are you ready for your breakthrough? It is very simple. Go to marketcrash.money/500K. Click this big orange button and say, yes, set me free. Take action now.
Team, without team, with a group, without a group. However, I don't presume to feel I'm the right buyer for it because there's such synergies for another company. For instance, you look at RSP and Concho, and Concho found when they bought RSP, they found synergies of over $2 billion. And if you look at RSP, which is very, I think, quite similar to Energen, that they paid, for instance, they paid $80,000 an acre for RSP. We sell today in the market at $27,000 an acre. They paid 10 times EBITDA. We sell at 7 times EBITDA. If you don't have to be a genius to put those numbers together and realize that just based on those numbers, that Energen is worth well over $100 a share. Now, I couldn't afford to pay that because I don't have the synergies. So what we do at IEP, we like to buy things relatively cheaply where companies are undervalued. One of the major reasons is, to say it bluntly, is the board. The board isn't doing what I consider to be their job, which is to let shareholders decide if it should be sold, not them. And that's where we disagree with a lot of boards. Now, there are many very good boards in this country, and Energen might well be a good board. I don't know enough about them at this point. But they did say, and they did agree, that they were going to do a process on March 7th, and nobody's heard about that process yet. So we're saying that, hey, look, if they're going to say, well, nobody's really interested in our company, which we've run into before, or actually bought some companies cheaply because of that, I would certainly be interested in it. Mm-hmm. But that doesn't mean that I presume that I would be the best buyer, and I don't think I would be.
But it sounds, at least somewhat, as though you and Meister together, in maybe a way that Meister couldn't do on his own, or didn't want to, or for whatever, by getting you involved, it's essentially putting the company on notice. Like, you better not only finish the strategic and tell us where you are, put yourself up for sale, and hopefully attract a big major bidder for these, pure play Permian assets. And if you don't, we could buy you too, in which case you're not going to be as happy, perhaps, with the outcome if we come in and clear the decks, so to speak. Is that a fair assessment?
I think you're saying it perhaps in too much of a hostile way at this point. In other words, Keith Meister has been pretty much of an activist in that company already, and they made an arrangement where I think Keith was able to suggest 2 board members. And they also promised that they would do a process, which means a strategic process, which means see if anybody really wants to buy it. That's at least the way we discussed it. I discussed it with Keith, and yet we haven't heard from them. And I'm just saying, look, it's a good company. It's an undervalued company, and shareholders deserve to have a choice if they want to sell this company. So they said they do a process and see if there are any good bids around. And I think that's basically the story here.
But you're confident though that there is a major out there in the energy patch, though, that will take a look at these assets and realize how undervalued they are currently, and what they have from what I can tell, 150,000 acres in the Permian. As I said, a pure play. That this company is exactly the kind of asset where energy currently is. I mean, the comeback in oil prices, et cetera, that it's time to pounce on this asset by a major energy company.
Well, and more importantly, you look for unique situations. When the activist model, you look for unique situations. And in this case, you have Permian with great oil reserves, and yet there is it's done so well in producing oil that there aren't enough pipeline capacity. So a company that there are companies with large pipeline capacities that don't have enough oil. And I think they'd be very anxious to buy a company like Enogen at this time. That's my opinion. Now, and it's obviously Keith's. And yet, one of the things that I think Keith pointed out, and now I agree completely, is why hasn't that process begun? Why haven't they just said, hey, look, shareholders obviously want to have the ability to choose whether or not they want to sell this, and they want to see if their buyers around. And Enogen, where are you? Why aren't you doing your process? You said you were going to do it. It doesn't take that long. We could get a man to the moon quicker. Then why don't you just go and put that process out?
The other wild card in all of this is that Elliott and Paul Singer, Carl, I'm sure you know, have a 4% position to your 9.9% joint position now with Meister. Have you had any comment or conversation at all with Elliott? Do you know what their intentions are? Do they support you and Meister? Where are we on that?
Well, I have not had any conversations with Paul. I know him. I respect him greatly, but I have not talked to Paul. I've been focusing on a lot of. We've been busy just with about Xerox and Sandwich. I'm involved with now as an activist. AmTrust, we're doing as we speak. AmTrust, interestingly, we had the same type of thing a little bit where we got called by a number of shareholders to help them out with what's going on in AmTrust and we're getting involved in that. So I have not really focused on Enogen until Keith called me, even though we were looking at it a little bit. So, so I have not at all spoken to Paul about it.
Well, what's interesting, I mean, clearly Elliott wants the company sold as well. Does it complicate matters at all for your team, if you want to put it in those words, that Elliott is there and is going to try and have a say in whatever the future of this company may be as well?
Well, as I say, I respect Paul a lot. It doesn't complicate it for me. I mean, I welcome a guy like Paul being involved. So, but we've had no conversations with him. But I'm sure we might. We're not a group with him, but I'm sure we would. I would certainly welcome talking to him. I mean, so I think he probably has the same views as I do about it.
Right. You mentioned. I'm sorry. I
just said that's my guess.
Okay.
Yeah, I'm sure.
Okay.
Yeah.
Let's talk about Xerox, which you mentioned a moment ago. You've called that one of the worst-run companies I've ever seen. That was a recent quote that I read. You just had a settlement with the company as well. You have a new CEO. The Fujifilm deal apparently is not happening, and maybe it's more than apparently. What now? What happens to Xerox now?
We have a new CEO, John Byzantine, who's, I think, immensely qualified to do this job. The company has suffered from poor management for many years. I met Ursula Burns. I liked her. But, I think it was Time Magazine that said she was one of the least respected CEOs in the world or something, in the country. And then what happened was, after she left under some pressure, Jeff Jacobson, who was sort of her acolyte, took over. And he was there 8 years, so, you can imagine what happened. But he was, we felt, not doing a good job. And but then it's a story that you wouldn't believe if it was in a show like Billions. Sometimes you look at Billions and say, well, it's an interesting, it's theatrical, but it could never happen in real life. If you saw this one on Billions, you'd say it's not realistic. It could never happen. I mean, and that story is sort of amazing.
Are you a stock or an options trader that is absolutely fed up with ordinary results? Are you ready for your breakthrough? I know how you feel because everywhere I turned throughout my trading journey, everywhere I looked how to produce phenomenal results within a short amount of time, everybody was telling me, no, it's not possible. It's not real. It cannot be done. So I got fed up. I discovered the 5 core fundamentals that helped me turn $12,000 into $466,814 in less than 7 hours trading options from my laptop. I know this probably sounds unrealistic to some of you, but the truth is I did it. I will share with you in this interactive video course specifically everything, every single detail, every action, every stock that was traded. As a matter of fact, I'm sending you my brokerage stake listing every trade that was taken that day. I realized one thing when I accomplished this is that I wish I had someone years ago when I was starting my trading journey and throughout my trading career that has shared these 5 core fundamental principles with me, because that would have saved me a lot of headache. That would literally save me a lot of heartaches, a lot of lost and suffered relationships. That would have saved me a lot of losses. That would have saved me a lot of time from discovering all these answers on my own. This is what you will be able to learn from this interactive video course. Secret number 1, discover the best stocks for trading options. Secret number 2, discover the top 3 best chart patterns for huge returns. Do you struggle with the decision, should I sell now or should I wait? And sometimes when you make a decision, do you see your profits vanish, or do you drown in regret when you get out of the position just because you see how much money you left on the table? Don't let this ever happen to you again. Secret number 3, discover the key to locking the gains. Secret number 4, knowing the trend will make you money. Discovering the TRO versus the trend will make you a fortune. Secret number 5, the holy grail of all secrets in trading: timing. Can you only imagine if you knew specifically on which days to trade and on which days to go fishing and enjoy life? And the secret number 6, the truth behind of how to trade the news that will take all the guesswork out of the equation and will help you trade with great confidence and extremely high probability. Today is your day. Are you ready for your breakthrough? It is very simple. Go to marketcrash.money/500K. Click this big orange button and say, yes, set me free. Take action now.
Well, look, I'm not telling you anything out of. What you have to do is read the decision to understand what happened, and that, in a way, is a metaphor for what goes on in too many companies in this country. You know, where the board doesn't really. I really think they give much more credit. They worry much more about how they're going to benefit than how the shareholders are. I mean, here's a board that was willing to sell to Fuji Xerox, to make a deal with Fuji Xerox, based on the fact, I'd say based on the fact that we could be, I have to go back to it because you have to understand the situation a little better than I can explain it in 2 minutes on a show.
But do you still want Xerox to be sold?
Look, Xerox definitely could be sold. I think Xerox could fit in with a number of companies. But to get back to my point, the board was willing to make a deal with Fuji, to merge it with Fuji Xerox. Fuji Xerox has a number of accounting scandals. I mean, it really could be a poisonous pit that you're putting a company like Xerox into. Xerox has many good assets. Palo Alto, it really is earning or cash flowing about $1.3 billion, and yet they were willing to put that into Fuji Xerox. And then you find out that the five of the members of the board, the old guard, so to speak, were going to get 5-year contracts to be on the board of Fuji, of the new company, Fuji Xerox, or the merged company. You found out that Jeff Jacobson was getting a huge salary. And then the fairness they relied on from Centerview, which pushed it and made it happen. Centerview was receiving $50 million in a fee And you can say, so what? They should get a fee. And then you find out when you got all the emails from the lawsuit, the Centerview was saying in an email only 4 days before they gave the fairness opinion, how the hell can you do a fairness opinion? Now, it's those who wanted the words, but it's an amazing story. And yet, this whole group were pushing this through, and it might have gone through if I and Darwin Deason hadn't stepped in and said, hey, enough is enough, and you're not going to get it done. And I'm not looking to pat myself on the back, but I'm saying that this is one of the problems we have.
Right.
In so many companies in this country. But this one stood out. Okay, that's basically it.
I understand. So you'd still be open, obviously, to Xerox being sold. Let me bring in one of the gentlemen on the desk with me today, Steve Weiss, who has a question specifically about AmTrust, which he owns. You just mentioned that you're active in it, but he has a question for you, Carl.
Go on.
Hey, Carl. We were going to be activists on it as well. You came in and took the thunder from us. The package, everything you said about the other companies, and I'll raise you one and go into AmTrust, where you have a severely conflicted board. They all work for the Carfunkels in another entity. You've got a special committee where the chairman's conflicted, and in fact came back in 1750 originally to say the company's worth, only agreed at 1350. The investment bankers are just ridiculously conflicted. So, but here you have 55% of the stock owned by the family and related trusts. Today, you announced that you're suing them in Delaware Chancery, where they're well known because there are 2 class actions against them in the Chancery, one of them being for self-dealing. But how do you get over that ownership interest to bring something good for it? The company really, I mean, the family, the Carfunkels and the Ziskines are just so brazen, and they do abuse shareholders. How do you overcome that ownership interest?
Yeah, it's sort of interesting, Steve, but I mean, as you know, this is what we've been doing for 30 years, and where I think they have a problem is as follows. They went out and got a fairness opinion and are going for majority to minority. And the reason they're doing both of these is that gives them the right to rely on business judgment. Because just like we agree with you completely, Steve, this company is tremendously undervalued and they're buying it cheaply. But as you know, and I think this is a problem that we could discuss in a much more general way, that too much is relied on business judgment in the courts. But that's what it is. And, you know, Delaware is a fair state, and they try to, you know, get things done right. But here's why I think they have a problem. On April 5th, they stealthily set the record date as April 5th. And they have a right to do that. So they set the record date, but never bothered to tell the shareholders. So you have a bit of a sham election going on here. I mean, by the time this election goes on, which is now, you know, May 20, 23rd or something, I forgot when that election will be, you have a great deal of stock changed hands, so you have a sham election. But being that said, technically they may win that in court and say we have a right to set the record date where we want to. But they don't have a right, in my opinion, not to tell the shareholders to disclose it on April 5th. And we think, therefore, they're going to need what they call full fairness. And when you need full fairness, you can't rely on business judgment, which is going to leave them wide open to lawsuits where you bring in your expert witnesses, and you have a lot more to say about what the value, just what you said, Steve, that why the value is ridiculous and why they will have tremendous damages. And, you know, when you're buying a company and you're going to have tremendous damages against you, you have to think twice about doing this. So I think they have a major problem. I mean, I'm getting a little arcane on this.
It's all right.
But it's something that we think that we have a very good chance of stopping.
Well, Steve is an owner of the stock, so I wanted to get that in. I do want to ask you more broadly about the market, too, but before I do that, it was one of our reporters here at CNBC who broke the story that you were accumulating shares of VMware, and we were wondering what your intentions are. You had told that reporter or it was reported that it was a medium-sized position. Some took that to be that you were gearing up for another fight with Michael Dell. Dell owns 80% of VMW. Where are we today on that front?
As they say, look at one of those old westerns. They say, "Doing good ain't got no end." So we're right there against Dell again, and maybe.
That answer didn't sound like a maybe.
Well, no, I say maybe because I hope he does the right thing and he pays a fair price for it. Look, it's sort of obvious. Nothing is obvious, but Dell has got $42 billion in debt, and that's a lot for a country, a third world country, let alone Michael Dell. And they got $42 billion in debt there, and I think they're going to have to do some type of merger with VMware, and just it's a question of what you pay for it, and I hope he pays the right price for it. That's so I bought it just as again, you know, this activist model I think is a great model because you do have again you have companies that will in certain cases take advantage of shareholders.
Have you been adding to your position?
Well, I believe I added to the position. I also bought the tracking stock too, which I don't think was mentioned.
Oh, right. That is new news that you bought the tracking stock as well.
Yeah. So we have the tracking stock too. I wish I had a bigger position than I have, but it's a sizable position I have. I mean, if you look at it, you know, it's in the hundreds of millions of dollars, but it could be more. But the stock's got away from me, and I do believe that that Michael will pay the basically right price, and that we'll all be, shall we say, in quotes, on a friendly terms. So, you know,
right.
I said a few years ago he didn't pay enough for Dell when he bought it. I believe I was right. We made some money on it, and I think we're back in the same situation. Hopefully, it's going to work out well. You know.
Yep. So, Carl, before I let you go, as we watch the shares in that tracking stock of Dell Technologies obviously move higher on that news that you've just made here on CNBC that you bought the tracking stock, how do you feel about the market today?
Yeah, you know, look, I think it's great news about the tariffs and not having a tariff war. I think, I think Trump did 100% the right thing in getting rid of these ridiculous regulations that were strangulating companies, and he's done a damn good job on that. The tax thing, I really believe in. Tariffs is a very, very difficult thing. It's got so many variables, so many landmines. But on the one hand, you have to be tough with not tough, but you can't let countries steal your intellectual properties. But being able to do a deal with China is great if it can happen. And I think this is why you have an up market, and I'm very glad to have seen that and heard that, and because I was concerned about this whole tariff situation, but I think it turns out that if you could do that, it certainly helps our industry and our company. So
you've told me in the past that you're pretty well hedged. Are you feeling like it's time to get less hedged? That we could actually go back to new highs if you get some of this trade stuff figured out?
Yeah, I mean, look. Yeah, over the last few months, my hedges aren't nearly as big as a percentage of our portfolio. So, and then, we have companies that, have done awfully well in the last few months in the different areas where we are. I mean, the companies that we own, like Cheniere and the refineries. So we sort of got lucky too, that, our refineries are in the middle of the country where you got all that oil coming out of the Permian, and so you get the advantage of the crack spread there. So we got lucky there, and then you know, Cheniere, if you looked at over the years, you know, we bought it a couple of years ago and struggled with it a bit, but it's certainly going to be the beneficiary of the rest of the world needing energy and oil pricing going up. This LNG, I think, is just, you know, these things you look at the simple ratios. You just look for risk reward, and so you got the benefit of that. So we've been lucky, and you know, when you're lucky, you can't always confuse it with being smart, I guess. But so it's worked out real well for us lately.
Well, we're looking at,
you know, IEP owns a lot of that.
Yep. Well, looking at crude oil back above 71. As I said, we're having a big day in the market. Carl, I got to let you run. Thank you so much for your time today. We appreciate it as always.
Good talking to you, Scott.
Yep,
good
likewise.
talking to everybody. Okay, good luck, Steve, with that. I think you'll be.
Thanks,
right.
Carl. Same to you.
Okay.
We think it's worth over $20 a share in our models, minimally.
Hey, you're preaching to the choir. Okay.
All right, Carl. Thanks so much. Carl Icahn, Icahn Enterprises, Chairman.